Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. On this segment, what I would like to do is to review some of the tools that we use in real-time trading for our own accounts, for our subscribers, for our self-directed traders that essentially apply the intelligence, the technology of the VC price momentum indicator. And what I want to show you here basically is the different tools that I use in combination with the codes that are proprietary codes that we use for our own trading, as I said, live here in the live trading room. Moving right into the chart here that we have on the board, basically it's the silver futures markets, and what we're looking at is the silver market as it is in real time right now. The last price is 1775.50. This is March 24, 2017. On our last video, we pretty much have been following the recommendation that we made back on February the 10th, somewhere in here, where we anticipated a bit of a correction. To be honest with you, did not anticipate the tremendous massive attack that we saw here on the 2nd of March, but we were into the area where it indicated the possibility that a correction could ensue, and in fact, this is exactly what happened. It came right down into what we were looking for, was about a 61.8% Fibonacci retracement, which kind of pointed out to about 1675. The low that we made on this move here was about 1682.50 before we saw this huge reversal bar that you see here reversed, and basically this was in anticipation of what we suggested our subscribers, which is to cover any short corrections here as of March the 10th. You can take a look at my videos on my archives and refer to the last video that we did where we suggested and recommended basically to cover shorts. Where we are right now is we have accomplished, if we use the Fibonacci retracement from the high that we made in February the 27th to the recent low that was made here on the 15th of March, we have seen pretty much a 50% retracement at 1768, and the market seems to be wanting to challenge the 61.8% retracement of 1789.50, which happens to be basically the golden ratio number. And if we do get to this number, it indicates for us, using our metrics, that this is a high probability to take some profits off the table, to reduce your long exposure, and basically to anticipate the market to consolidate or even correct at these levels. Let's apply the Fibonacci fan lines to the equation and see pretty much where we are in what is transpiring right now as we connect the Fibonacci trend lines from the high that we saw in August of 2016 to the recent lows that we saw back in December. And those lows we connect to the recent high that we made on February the 27th, and that gives us a pretty balanced picture of the resistance levels and pretty much also the support levels using the Fibonacci trend lines. And in this green bar, this line here, you can see that the market tested the long-term level of support that became resistance on the 13th, and it broke that resistance on the 15th, making that resistance a level of support. And obviously from there, we see the market now has run up to challenge the second resistance Fibonacci trend line, which is where we are right now, coinciding with about a 50% retracement Fibonacci into an area that appears to be of resistance. If we are to see a blow off or spike high, so to speak, in silver, the targets are well in place at 1789 to the 1806 area, where I would strongly suggest for you to unload any profits, any long positions that you may be carrying at this point, and waiting for a little bit of a correction as the market relieves the overbought condition that it would indicate to be at these levels here if accomplished. Let's add the codes that we use and see where we are in terms of current price in relation to our own proprietary algorithms. And in here you can see that the price has gone into what we call a red zone. And a red zone is an area that indicates supply. These are levels of supply that economically are well priced for some kind of supply to come into the market, for some kind of resistance to come into the market. As you can see here, the anticipated overnight sell level was 1779 coming into today, and the high was 1779, so it hit the target pretty much as expected. And what you see here is a combination of the daily and the weekly levels of resistance or supply that indicate that we're going to be having a bit of a challenge here to run up into these numbers. But there is a probability that they could. If they do, this is where you liquidate your longs once again and stand on the sidelines looking for some kind of a consolidation to take place. Where can we go if in fact a correction ensues? For that, we take a look at the lower end of our indicators that particularly on the weekly numbers that are in blue. And we begin to see here, starting with the daily levels of support down into that 1751 area to 1742. If we close below those levels, then we're going into the weekly mean or the weekly average price, which right now is at about 1727 to 1730. And this would be the first level that we could anticipate the market to test. As we come in next week, we're going to have the numbers for the next week, level of demand, level of support, and very specifically indicate where and what levels essentially we'll be looking to buy. If you would like to receive that information, please subscribe. I'll be more than glad to send you a guest pass for you to come and see what we do and how we use this information pretty much live right here in the Equity Management Academy live trading room.